The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, folks. I want to thank Tommy O'Brien for doing this early morning update. This is really a great part of TFNN, giving that quick review at 9 o'clock. I think that's a really good idea. I was listening to Tom O'Brien talking about this prize fight that's coming up with I can't remember, Merriweather, whoever he's fighting. I have a great story to tell you about prize fighting. 1997, in August, I had won a small satellite tournament in Tucson to play. It's at the top of the hour now. If that's right, top of every hour. I forgot about that. But it was in 1997. I'd won a small satellite tournament in Tucson to play in Las Vegas for a $50,000 first prize. So I was only in the tournament $100, plus I got a free room. So I went over to Vegas to play, and I was walking through the casino. One of the guys from Tucson was there, Big Mike. And Big Mike's great-grandfather had founded Tucson, Arizona in 1865. So he was a big landlord in Tucson, and he was a big, big gambler. And he asked me if I wanted the tickets to this fight. And I said, Mike, I don't like prize fights. And he said, I'm not going to go. Here, take them and see if you could sell them. So I took the 2 tickets, and he had these badges that you had to wear around your neck. I looked at it, and I saw that these were ringside seats, second row. So I walked into the place and, had to go through security and everything. And I said, well, how am I going to sell these? And I see this dude there in a white suit and a white cowboy hat. And he's looking around like he's trying to find tickets. So I walked up to him and I said, what are you looking for? He said, I need 2 tickets. And I said, I got 2 ringsides. He said, oh, man. He said, how much you want for them? And I said, what are you paying? He said, I'll pay $5,000. I said, $6,000 and we got a deal. And so he starts counting out the money. He had the money right there in his jacket. He starts counting out. When he gets to $6,000, he goes 61, 62. He was thinking $6,000 per ticket. I sold those 2 tickets for $12,000. Took them back to Mike. He gave me $1,000. I think the fight lasted 3 rounds. That would have been 9 minutes. And I don't know who it was. It was somebody. It was Tyson. I think it was Tyson. Anyway, that's my fight. My only fight story that I have, other than the ones I had with my ex-wife. All right, let's get on with the markets, folks. We got a good guest today. One of our favorite people, Stan Harley of the Stan Harley Stock Market Letter, will be on at 9:30. He always got some great information for us, so we want to watch that. You notice that I've posted the chart like we always start the show with the DAX index. I posted the shorter ones, of course, but I do want to show you the longer-term chart here in the DAX, because you can see here we topped about 2 months ago, and we're making a sort of a normal correction. Now, that's a big ABCD pattern, folks. It's taken 2 years to complete up there at that 13,000 level, so that's very interesting. Remember, this topped several months before we topped in the stock market. So that's the main thing to keep in mind. I wanted to bring up the E-mini S&P here today just to show you 2 things that are going on with this market. We've had these ABCD patterns forming for some time now. We had a little Gartley forming yesterday. It came down to that 24.34 level. That was a 78% retracement of the low that we had on the 22nd. And it was also a 38% retracement of the low on the 21st. So that's a key level. And the level around that 24.48 is a level of the 786 retracement. So that should be very interesting, to keep an eye on. But there's one market that really is on the watch list, folks, from my opinion. Anyway, let's get this up and take a look at it. Let's look at this gold market here. I've been bearish for gold for quite a while, especially when we got up to that 1307 level and backed off. But boy, we didn't back off much. We're trading $13 below that, and $13 in gold is one, blink of an eye. But you'll notice the narrow range that we've had here after that top was in. You notice after the other tops were in back in April and June, the market came off very rapidly. This was not the case this time. We've been in this really tight range now for 4 days. That's usually because the trend is strong here since December, and the fact that we made a 61% retracement in July makes you think that maybe it's got a chance to break out to the upside. Now, it could go the other way, but that's what I'm watching in the gold. I'm really surprised that it hasn't even backed off much. So there's always a possibility. You're right. Gold could hit 1443 sometime in 2017 if we clear that 1320 level. That's only $110, so $110 in gold can go very, very quickly. If we go down to a 60-minute chart in gold, you're going to see how narrow this has been over the past 5 or 6 days. You'll notice that we've came down. It's a pennant pattern. That's exactly what it is. It's actually more of a flag, I guess. Well, the pennants, they fly diagonally with the tip. Flags have squares, so this is more of a flag pattern than a pennant, I believe. But they're basically the same. They're flying in the air. All right, let's take a look at this gold market here, and we'll look at it very quickly. You'll notice here we had a high of that 1307. We immediately dropped $19. Actually, we dropped $21, didn't we? Yeah, $20. Then we had rallied up to a 61% retracement, came down, tested the low again, and if we get above the 1302 level, we're trading around 1294 now, I guess. That would tell us that we've got a chance to, break out to the upside. If it would be able to, get through that level. But we're such a tight trading range after that high. Usually after a significant high like that three drive pattern in the gold would really tell you that you've got a real chance here for this market to really have legs if it can get through that. So pay attention to it. I'm a nervous bear, as they say in the trade, but I'm willing to, if we get above that 1307 number, that anything's possible. Now, silver's still, acting quite weak. As we look at silver, it's still down around that a little bit below the $17 mark. So it has not followed through, and we still have a lot of problems in the XAU, the silver gold index, which is, basically bearish. The $64 question is, why is gold in this really, really tight trading range that it's been in over the last 4 days? That's very unusual. Those narrow range days are very, very important because it signifies that something's getting ready to happen. Larry Williams, many years ago, did a lot of work on these sequences of narrow range days, and as did Tom DeMark. And some of these statistics that they have is really acting pretty nicely. Another one that you just mentioned in the den, the fact that copper, we've had a big pattern in copper up at this $3 a pound level. And we'll put this up so you can take a quick look at it again, because it hasn't backed off either. It's still hanging there. The low this week has been 297. The high's been 301. I'm not quite sure where it's trading at today. The last time I checked, it was trading at around $3 a pound, which is right at that number where all three ratios come in together. And that could be the Jackson Hole, could be the thing this week. Who knows? 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We'll have Stan Harley here at the break. I wanted to start out the second segment here to go over this New York Stock Exchange Index because you can see here as we posted the chart, you have some very, very interesting harmony. If you'll notice the rally between the 10th of August and the 16th, it's exactly what's happening between the 17th and where we are right now. Those are exactly equal. The first rally, you'll notice, was a 50% retracement. That led to the big ABCD to the downside that stopped right at the 1.27 expansion. And now we've rallied back doing the exact same thing that we did during the 10th to the 16th. But the difference is now we're at a 61% retracement of the high from the 16th, and we're at a 38% retracement from the high on the 8th of August, which was one day after the lunar eclipse. This basically, folks, is the 135 pattern. This is a very, very bearish pattern. Now, if the market is really strong today, i.e. the Dow up like 120 or so, this is certainly going to be a failed pattern. But this is what we're looking at this morning, whether this is going to hold up or not. But that's this. If this is all we get now, we're looking at something, pretty dramatic to the downside. As I mentioned several times this week, tomorrow is the big anniversary date of the high from 1987. That's also the day that George Lindsay, the fellow who did Three Peaks in a Domed House, he was a very, very, he was on Louis Rukeyser all the time, but he was a really good astrologer and technician. He passed away on that date at August 27th of August 25th of 1987. That was the day of harmonic convergence, where all there were 5 major planets in the sign of Leo with a new moon, and that marked the high of 1987 into the crash of October 1987 87, which was exactly 55 days from that high. So that 55-day scenario, if we're looking at August the 8th, comes in around the 2nd or 3rd of October. So we'll watch that. I don't know if it's going to happen or not, but we'll be able to see. The fact that we're having just a little bit of a bounce here, only a 38% bounce in the New York Stock Exchange Index is really something. So you don't want to go with, someone's asked me if I ever worked with Phil Cavato of Pittsburgh. No, I never did. The fellow who did the most work that I knew on George Lindsay was Jerry Favors out of Columbus, Ohio. Jerry was a good friend. He and his wife Lindsay ran the business, and he was a workaholic. And about the age of 41, she found him there at the desk, and he had passed away of a heart attack at the age 41. He didn't smoke. He was tremendously health conscious, but evidently his heart was bad, and no one knew it, and he had passed away. But I never knew what happened to Lindsay. She was one of the most beautiful young women I'd ever met, but really nice guy. Anyway, he was the best I'd ever met at this. And then, of course, the fellow out in Ed Carlson of Seattle Technicians Associates. I always get that wrong. Seattle Technician Association is also doing great work with the George Lindsay work. But George was always on the Louis Rukeyser show. He's a good friend of Louis and a couple of those guys that used to be on there all the time. He was also a good friend of Arch Crawford. So, by the way, Arch Crawford was on the Neil Cavuto show this week, and Cavuto had thought that Arch had passed away. And so that's why he had him on the show, to make sure he was still alive. Anyway, somehow something posted that Arch had died, and that did not happen. So, but that's neither here nor there. Okay, let's get on to some of these other things that we're watching here in the market. But watch this, the two things that to me are important. The quality of the rally that we're having in the stock market, and also the fact that we're looking at this market for a really interesting spot in gold, because it's real narrow range today. Whatever it comes out of here, this narrow range will most probably be the most important thing that we're watching. Let's get on to another one that's right at the proverbial moment of truth, and that is our Treasury bond market. Yesterday's high in the bonds, 156.20. So it's right in this area where if it pops through here, it's got legs to make it all the way up 3 handles higher, to that 158 level. Whether it's going to be triggered by the thing at Jackson Hole, Wyoming or not, I'm not sure. But that's what it looks like right now, that it's got a bias to the upside. The top should be here, but it's not backing off at all. And with those folks there talking, it's anything goes. So, and believe me, the Federal Reserve is in there trading all the time, folks. It's a private bank. 4 bankers. I know it says it's federal, but the only thing federal, about as close as federal it gets, is it's on Pennsylvania Avenue in Washington. Is about the only thing that has in common with the federal government, but not many people, realize that. If you want to know more about that, there are 2 great books. One is The Secrets of the Temple, and the other one is The Creature from Jekyll's Island, which is the place where they started the Fed back in 1913, I believe, on Christmas Eve. I think that was the date. It was early 1900s on Jekyll Island, South Carolina. Anyway, let's watch those today. We got some really serious things going on. Of course, stocks are serious. We'll have Stan Harley on in a few minutes, and he'll give us some really good information. He's had some really, really good, accurate days, along with our other guests too. So we've been pretty lucky here. It's Georgia. That's right. I knew it. I knew it was not South Carolina. I knew it was Georgia. Darn it! I tell you, the gray matter just keeps getting darker and darker and darker. I don't know if I just got too much clutter up there or not, but that's the way it goes. Yeah, it's close enough, but not enough for tiddlywinks. Okay. The questions about the gold and the XAU, folks. The XAU usually follows the gold pretty well, but this time it's not very good. The XAU still looks quite bearish. I mean, let's put this up here. You can see here that this has nothing to do with any type of a breakout that we're seeing in the XAU. So Unless we get that XAU above that 86 and a half level, I think that it's still, heading to the downside. And we still have that negative divergence in silver, which is also, relatively tough. So we want to keep that one in mind, also, because there's just a lot of things, happening today. And of course, we always knew that August was going to be a pretty volatile month, and it still is. And it'll be followed by another volatile month, September, and then October, possibly. But we'll see how things are going to move on, and we'll see what's going on. Okay, with big excitement here, we found a little snake in the garden today, a little garter snake, and the little boys are all excited about that. He was eating snails, and they couldn't get over the fact that this little snake could eat snails. But he didn't even use garlic. That was the main part about it. It was really surprising. Okay, we're going to come up to a break here, and you'll stop my little jaws from flapping, and we'll have somebody that'll give us some terrific cycle information, which is Stan Harley of Stan Harley Stock Market Cycles. And he's always got some really good information, and we'll see what's going on. Okay, folks, I think we're almost ready for the break. I don't see my little clock on the wall yet, so we're going. The transportation still look very bearish, folks. They're still heading to the downside. So, okay, take a little break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I believe we have our good friend Stan Harley on the line. Stan, are you there?
Good morning, Larry.
Yes, well, I want to take just a small second here, Stan. I had some bad news just reach me. Arch Crawford's ex-wife is still a good friend. Carolyn Crawford passed away yesterday after 12 days in intensive care. She had a bad auto accident, so let's send some white light out to her. She was a very good astrologer and a very nice lady. Stan, let's start out with this 55-day trading cycle that you're looking at. Would that be okay?
Absolutely, yeah. I'm sorry about Arch's wife. Wow.
Yeah, it was his ex-wife, but she was still, basically, they were still friends and everything. So it was, it's always bad, but it's some young person. She was only 60. She was 64, I think, and she looked 54 or 34.
Wow.
Yeah.
Wow. Well.
Hit by a drunk driver, Okay, let's get on. Let's talk about this 55-day cycle.
Absolutely. You and I have talked in the past for many years. The dominant trading cycle in the stock market has been 40 trading days. Interestingly, the cycles, of course, as you and I both know quite well, they come and go, they expand, they contract. Sometimes they skip a beat, sometimes they disappear altogether, only to later recur. And that is apparently what's going on in the present time frame. For the last 6, 7, 8 years, that 40-day cycle has just ruled the roost on the daily charts. But interestingly, it's all but vanished here from the November election lows of last year. And what we have now is a 55 trading day cycle. 55, of course, being a Fibonacci number, and that seems to be the dominant cycle right now since November of last year. If you just add approximately 55 trading days from that November low, you get the January 31st low of this year. You get the April low, and then you get the July low of this year. And then if the pattern continues, it points to a low right around September 21st, plus or minus a couple of days.
Wow.
So I think that's what's going to happen here, Larry. I think I think we're in a downtrend. We're in an intermediate downtrend. In the very, very short term, we're in a counter trend move up. But I think the cyclical parameters, to me, suggest the trend is down into right around the fall equinox, right around that time period.
Well, that'll be interesting. I remember the book that Hearst wrote, The Profit Magic of Stock Transaction Timing, that you and I are very familiar with, back in 1970. He focused on that nominal cycle of 40 days, and that whole book was based on that type of principle, was that nominal cycle with the synchronicity and harmonicity and all the other stuff that he had. And, later on, it proved to be a little bit skeptical because it would shift, just like you were mentioning, like we're doing now, out to 55 days or 89 days, something like that. But, at the time he wrote that book, it was basically etched in stone that they never changed. But a few years after, I think in 74, 75, they started to shift a lot, and the book lost a little interest. But it was still a very popular book, and still is, I guess, for some folks. But anyway, let's move on to the next one that you're looking at, and that's we have these, I think, is that a 200-day moving average that you're looking at in the Dow Jones?
On the charts of the Dow and the S&P, if we do get a low around that time period, I think the next thing we want to look at is how far can the market fall here, and that's it's hard enough trying to predict what's going to happen on the x-axis, but forecasting what's going to happen on the y-axis is even a big challenge.
I'm quite familiar with that.
It would be reasonable from the things that I look at and from experience to see support at the rising 200-day moving average. We have broken below the 50, and we're kind of doing some dance steps right around the 50-day moving average as you and I speak. But intermediate declines, which tend to come on average about every 33 weeks. This one's expanding a little bit. But these intermediate declines tend to find support in the vicinity of the 200-day. And that 200-day moving average, of course, is moving up with each passing day. But assuming we get a low right around the 19th to the 22nd of September, that would suggest support around 2350 basis the S&P cash, and that's about It's about 100 points below where we are right now.
Mm-hmm.
So
that's not even a serious correction.
Well, yes, but it would be less than
10%. It would be less than 10%, correct?
Yes.
Mm-hmm.
Yes. I'm not suggesting we're going to fall that far, but if we were to decline that much, I think that would be a probable area of support.
Okay. We have a question from one of our listeners this morning, and that is, when you look at the different components of the Dow Jones, like the transportations and the utilities, are you a follower of the work of Richard Russell at all as far as Dow theory? Because I know, he was really popular in Southern California when we used to hang out together. So do you have any comments about that?
I do. I take it a step further. I don't just look at the industrials and the transports and the utes, Larry. I look at what I call the Big Five. And for me, the Big Five are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And in any healthy bull move, I want to see all five of those making new highs. And in a bear decline, I want to see all five of them going down, making new lows. What you and I as technicians look for are divergences. And if we're in a bull market environment and we've got one or more components among the Big Five failing to make new highs, well, then that's significant. At the August 8th highs, by the way, the Dow Industrials, the S&P 500, and the New York Composite indices all went to new all-time highs on that date. But, and this is important, the Dow Transports and the NASDAQ Composite indices both failed to confirm those highs. And that's interesting. That's very important from a technical standpoint.
Yeah, it certainly is.
And if the market sells off for the next month, as I'm expecting, then I would look for some kind of divergences to take place at that September low. That is to say, maybe we see 3 or 4 components among the Big Five push to new lows, but maybe one or more does not, like the transports. The transports frequently are the first to top out or the last to bottom out, or vice versa. That's something, you and I have talked about this before. Watch the trannies. They tend to lead the market either on the way up or the way down by failing to confirm. And they fail to confirm the August 8th high. Let's see if they fail to confirm a low right around the fall equinox.
Stan, we have another question from one of our listeners in Laramie, Wyoming, and that is, do you see any possibility of a crash scenario given where the market is right now with the valuations and everything?
A crash scenario? No, I don't. No. Way down the road, yes, but right now, no. The market, from my perspective, is still in a healthy bull market.
Okay.
The intermediate correction.
Okay, we're gonna pay a few bills. We're gonna play a few bills. We'll be right back with Stan Hartley. Can you stay with us, Stan?
Absolutely.
Okay, thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Stan Harley in St. Louis, Missouri, down there looking at the eclipse. Tell us what it was like, buddy.
Oh, wow. That was awesome. I flew out here from the West Coast. The centroid of the whole eclipse was right around Carbondale, Illinois. Mm-hmm. And I found a little spot, St. Genevieve in Missouri, just a few miles west of Carbondale. We got 2 minutes and 40 seconds of totality. That was a incredible experience, Larry. I've never seen a total solar eclipse before.
Yeah, I know. Can you imagine what the ancients thought of when they saw those things, thinking the earth was flat and all of a sudden going dark in the middle of the day and animals being silent? It's just totally amazing. Oh, speaking of being silent, you were talking to us about the bullishness of Treasury bonds the last time you were on 2 weeks ago, and it's certainly gone up from there. Are you still relatively bullish on the bonds? We'll talk about those for just a second.
I am, Larry. Yes, I do think bonds are going to chug a lug higher and pull the TLT up with them. I'm a bond bull for about another good 5 years here, and I think pullbacks are to be bought. The weekly 50-week moving average is still coming downhill. Prices pushed a little bit above that, so we got to see a little back and fill either side of that line to get that moving average to level off and then turn higher. And I think that's what you're seeing now. And ultimately, I think bonds are going to be substantially higher, which means interest rates are going to go not higher, but the interest rates are going lower. Yes, indeed. Mm-hmm.
Well, that certainly makes good sense. One other question that one of our listeners is asking is about the gold market. You've been pretty good on the gold market also, and we'll talk to put this other chart up here on the gold. Just 1 second. Give me a chance to put it in here so that the folks can see it. And one of the questions, what do you think? Can you give us a price objective that you're looking at in the bonds? What the yield could be? Let's say on the 30-year that's yielding at about 2.8 right now. Do you have a guess on what it would be?
Well, I do, Larry. I've looked at bond data going back a couple of 100 years, and I found a very pronounced 40-year cycle in the data series. The last major turn in that cycle was in 1981. Prior to that, there was a turn in 1940, and then 1900, and so on. We had a major low in yield in 1940, right around 2%. And I think we're going to get back down in that same area by the time we get to the latter part of 2022. And I think you'll see some kind of double bottom with that. It could be just a smidge higher or smidge lower, but essentially a double bottom with that interest rate level. And then after that late 22 time period, Larry, I see a number of markets between the summer of 2022 and January of 2023. Everything from stock market to bonds to home prices, a lot of major markets poised to make very, very important pivotal turns in that time period. And I think that probably is going to be a major pivotal turn for the economies here in North America as well as Western Europe as well.
Well, that's very good, interesting information. One of our listeners is asking the question about gold, and you've been had a pretty good idea of what was happening in gold. What's your feeling on gold now? You've been in this really tight trading range now for 5 days. That's very unusual. We haven't been in more than a $7 or $8 range in gold for 5 days. That's do you take that into consideration at all, these tight ranges?
I do look at that, Larry. From the broad brush picture, I'm a long-term bear on precious metals. I think the top we saw in late 2011 is analogous to the peak we saw in January of 1980. That bear market from 1980 spanned 21 years, by the way.
Oh, I remember it very well.
Gold has a structure that is just the opposite of the stock market. While the stock market tends to make rounded tops and spike bottoms, gold prices, the structure is just the opposite. Gold tends to make spike tops and rounded bottoms. So we came off sharply off that high in late 2011, made a low a latter part of last year, and we have pushed back. This is a counter-trend move higher. And the structure looks, oh my gosh, it looks to be a mirror image of what we saw following the January 1980 high. We had an initial break there, then a rally back up. It retraced some portion of the decline. It chopped sideways for a bit and then trended lower. And that's what I see happening here. We're kind of doing the dance either side of 1,300 right now. I think this is, as I said, a counter-trend rally in a bear market that has many more years to run. Whether we get back up to 1,350, 1,375, I'm a little skeptical. That could happen, but I think rallies are probably going to be sold here. I'm positive on the metals now near term, but I'm thinking this thing's going to run out of juice, run out of rocket fuel, as I like to say, very, very shortly.
Well, it's certainly interesting that we have the XAU is lagging badly, and also the silver is lagging badly, and usually they go together. So that's another reason. We have a question from one of our listeners that said you were very bearish the stock market a year or two ago, but Stan, you weren't on here a year or two ago. It's only been the last 6 or 7 months that you've been my guest, correct?
That is correct. Yes.
Yeah, because you were not on here because I didn't think so. Because I look at your letter, you've been bullish for a long time in stocks. So I'm sure that he must have somebody being confused with it. Maybe he was confused with me because I have a tendency to trade the bearish side, because the bearish side is the fast side. You make money very, very quickly, whereas on the bullish side, it's a lot slower. Stan, how would the folks get to reach you? Just give them your email address so that they found to take a look at some of these charts, or maybe test your letter or subscribe to the letter. How do they reach you?
Well, I have a website, Larry, at www.harleymarketletter.com, Harley, marketletter.com. And folks can go on there, and my contact info is on there as well, email address and telephone number. And I would certainly welcome the opportunity to speak with anyone who'd like to call me or email me.
Oh, that's good. And you're going to be moving right next door to me in Arizona. Is that correct?
I am. I'm in the process. Sold a home in Southern California and looking to move to Arizona. So we're.
What city are you going to live in?
Leaving in the Phoenix area.
Was it Gilbert or Scottsdale? Or
Well, don't have a place picked out yet. We're house hunting right now, and we're leaving St. Louis later today to fly back to Phoenix.
Now, they have some good value there. Please, get in touch with me when you do get your move complete, because we are up there, at least 2 or 3 times a month, because I play, in the poker tournaments there. And so we could meet, and there's a lot of guys that are up there. You've got there's so many, Mark Leibowitz and Tom DeMark. I mean, there's just a whole bunch of people that are in that area. So it's a really nice place to hang out. So I think you'll enjoy it.
Beautiful city.
Yeah.
Yes, it is.
Yeah, we'll have to get together, take you and your wife out to dinner. Listen, I want to thank you for being on our show today, and we'll have you on in a couple weeks. And keep up the good work. And you'll be our guest as long as you're right. The first time you're wrong, Stan, may you have a good life. we hear that so much on here. They throw vegetables at me here so often I end up eating salad 3 times a day. Hey, listen, God bless you, son, and travel safe, my friend.
Thank you, Larry.
Bye-bye.
My pleasure.
You bet. Bye-bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to talk a little bit here about failure patterns, and this is the Christmas corn, December corn. As you can see here, we've been in a pretty much of a free fall. We've dropped over 60 cents a bushel in corn since July. We've exceeded all ABCD patterns. The only thing that's there now is the 1.618 expansion down at the 348. The most important thing here is the fact that we had this August 21st new moon and solar eclipse, and that should have been a bottom in the corn around that 362 level. And of course, we've gone below that. That's just telling you that it's not working. You stand aside, and that's one of the reasons why you do this. Forecasting, you're going to be wrong a lot. You know, like the prince said, I had to kiss a few frogs before I found the princess, and it's the same thing in trading. It's not the number of trades that you win. It's the number of trades you control in your loss, because the only thing you control in your equation for risk and reward is the risk part, because you never know what the reward is going to be. So if you focus on the risk, you'll be a lot better off than if you try to focus on how much money you're going to make on a trade. So that's the main thing of watching. The seems like the S&P had some resistance up there at that 2448 level, which was the 78% level that we had talked about earlier. And so watch it. And also keep an eye on crude oil, folks. We had a nice break in crude oil this morning off the 78% level up there at that 48.50 level. We're down now to below 48, 47, 85, 40, 90, something like that. That's a very interesting spot for if it's going to hold. That will be very interesting to keep a close eye on. And finally, please say some prayers for Carolyn Crawford, Arch's ex-wife. Always liked her. She met her in 1987 at one of the conferences. I was with Arch, and that's where they met, and we traveled a lot together. They split up about 10 years ago, but they still remain friends, and we have all of us together. Anyway, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.